Morning. It's good to be back once again. Last Tuesday, I was talking about sterling, and my recommendation was to sell sterling at 125 figure 10 area for recent downtrend to resume, and then the first target is 123 even, and then 121.60.70. The high on Wednesday was 125.22, and you can see what a difference a week made. Sterling has literally crashed in last couple of trading sessions due to markets rising fear of a no deal hard Brexit due to the stalemate between the new Conservative government and the EU on Brexit negotiations. So today, sterling continued its recent losing streak shortly after Asian opened and penetrated yesterday's New York 28-month low of 122.13, and it hit an intraday low of 121 here in Asia. So my second target, 121.60.70, has been met. So what's in store for sterling this week? So let's look at the weekly chart. Actually, it doesn't give you much clue on how low cable can head to, but looking at the falling weekly indicators, the MACD, RSI, and also the stochastics, which are not shown here, because price is trading well below the two moving averages, suggesting downward bias remains. So there's really not a lot of support for sterling. To refresh your memory, sterling hit a 31-year bottom when it flash crashed to 114.91 in October 2016, and after that it staged a rebound, and then the next support is 2017 low at 119.83. So if 119.83, which I call a pivotal support, is penetrated on a weekly basis, then it looks like sterling will be en route to 114.91, and it is possible, since there are 2 months left before the Brexit expiry comes. So obviously, unless we see a breakthrough in Brexit talk between the British government and the EU, otherwise the traders will continue to sell sterling on rally. So notwithstanding what I've just said, I think the market is overstretched to the downside. So because market is now expecting Fed to cut rates for the first time by a quarter point. So maybe sterling will get some minor respite when the Fed cuts rate and stage a short covering rebound. So my recommendation is to sell on any rally to 122.20.30, and the first target would be the psychological 120, and then 118, 119 level. And on the upside, one has to place a 100-point stop loss at 123.20, and only above that we would see a temporary low has been made, and we may see sterling moving back up to 125, 125.50, but that is the unlikely scenario I would opt for. So that's my take on sterling. Good luck and goodbye.